Well, good morning, happy new year. From the Bank of England's point of view, it's showing the consumer is holding up a bit better than expected. Considering November, the new energy prices really did come through and start to hit the bottom line for the household. But household cash flow seems supportive of for spending right now. But this was November. What happened in December, remains and to be seen. So we certainly can't say the UK economy is not out of the woods, not by any stretch. Mortgage costs are going up. I think that's the latest headline. So I don't think this really changes the outlook, for the MPC right now, but they'll take any good number that they can get.
Geoffrey, good morning to you. Jeff's going to come back in again in a minute, but just something you said piqued my interest. And Happy New Year, by the way. You said it remains to be seen what's happened in December. Well, I know it's only anecdotal, but from Sainsbury to JD Sport to Tesco to Next to Marks and Spencer, actually, they're all saying things were at the top end of our expectations. So does it remain to be seen what the consumer did in December?
It's interesting, some of the names that you mentioned, without naming names, but what part of the value chain in terms of consumption does that actually recommend, right? Does that represent? So we need to look at, what the GDP value add component, is as well. If they are at the top end of expectations, right, fair enough. But then at the same time, even if, let's just say, the consumer is holding up well, what about the other segments of the economy? We know there's going to be an impact, from the holidays, from industrial action, as well. So the outlook at this point, is this, going to tilt, some of those who voted on hold or think about 25, is it going to push them back into the 50 camp? I'm not so sure yet. So the risk terminal rates in the UK still is anchored firmly to the downside.
And yet, the enthusiasm around the FTSE 100, in spite of, some of the concerns that you're expressing here, doesn't seem to be abating at this point. We're back towards these all-time highs that we saw, back in 2018. Do you think there is further momentum for the FTSE 100 at this point, and where does that buying come from?
FTSE 100, should outperform the 250. So the buying has come from expectations of industrial output, picking up. Now that's the China reflation side of it, helping the miners, helping materials, sector. All of that, I think, does need to come into play. If anything, there's absolutely is going to be upside risk to that. How is that, however, going to trickle down into the UK economy? I think remains to be seen. But if you look at our custodial flows, a lot of interest in Brazil, a lot of interest coming through in Chile. And that's already starting to fill into purchases in terms of Latin America consumer discretionary, right? So now, will that translate into a global industrial reflation, which certainly can help the FTSE 100 as well? I'm not so sure yet, but certainly any company with international exposure, I think, given the US at best a mild recession, and we don't even think that's going to happen, and with China recovering as well, if you have a global outlook, I think things are looking up.